I have a tactic that is it's not 100%, but this tactic is the closest tactic I have to winning 100% of the time. Whenever this occurrence happens, it's nearly 100% of the time. Now, 70% is lower than that. This tactic I'm explaining to you, or I'm telling you about, has close to a 98, 99% accuracy rate. Its problem is that it happens every 4 years during a presidential election year. Do you see what I'm saying? What I'm saying, this is a 70% occurrence rate. So my tactic that I'm explaining to you is very high in its accuracy rate, but I got to wait 4 years for it to come around again. How can I make a living like that? No, you want something with a much higher occurrence rate. That tactic has a low occurrence rate once every 4 years. You want something that happens so frequently that you can't possibly take all the opportunities because you don't have enough money. That's where the game of making your living in the markets comes from. It comes from finding reliable events that happen very, very often, that happen virtually every single day of your trading life. Otherwise, how can you make a living from something that happens once every 4 years? You can't. You have to find things that happen every single day. In fact, what I'm going to teach you, I'm always teaching my traders things that happen every 8 minutes in the market. That's right, every 8 minutes. You will be able to find a bear elephant bar every 8 minutes of your life. That's how frequently occurring this powerful event. There are actually 10 major bars that the market repeats over and over again. Look at them. There's a total of 13 bars, all right? Including, there are 3 bars that have no color. But as far as the color bars, there are only 10 bars that the market can throw at you. These 10 bars, the market throws at you over and over and over again, not in any particular order, but there's only 10. Now, I want you to understand the significance of this. I want you to look at every single bar on this chart as if it's a letter in the market's alphabet, A, B, C, D, E, F, right? So the market has a very limited language to communicate to you through. And this language primarily has 13 letters, 10 of which are color-based letters. It has only 10 colored bars that it can throw at you and repeat over and over and over again. And this is one of the reasons why market play is actually simplistic in nature. It is not complex like most traders feel. It's simplistic. It appears to be complex because we bring the complexity to the game. We bring lack of education. We bring lack of training. We bring our fears. We bring our lack of discipline. And all of that creates the complexity that the market does not have. The market is relatively simple. It's got 10 things it can do. It can't trick you with 20 things. It can't trick you with 150 things. It can only throw out these 10 bars. And if you know each one of the 10 bars and what statistically happens after each one of these bars forms, you have a big part of trading mastery under your belt already. But out of these 10 bars, there is one in the bear market that matters. No other bar matters more important than this one bar in a bear market. Now stare at it. Stare at it right now. I want you to stare at it. I want you to take your phones out and take a freaking picture of this slide. You can take pictures. You can share this. I don't care what you do with it. This is your gift. This is yours. out of all the 10 bars that the market repeats over and over again in a bear market, when markets are crashing, when markets are declining, when markets are under sell pressure and everybody's losing, if you zero in on the most important bar of all, the bear elephant bar, the one I have circled here, you are going to be just fine. In fact, you're going to be more than fine, because what I'm going to teach you to do with this bar for the next several months, 8 months, a year, is going to potentially change your life. So make sure you don't miss a single thing that I'm covering here today. The bear elephant bar is our key out of all 10 bars, and this is for the foreseeable future. Now, the bear elephant bar, let me give you some important statistics about it. All right. The bear elephant bar in a bear market has a 70% occurrence rate. Do you understand the insignificance of this, traders? 70% of the time, 70% out of all the other bars, look, out of all the other bars, look at all the red bars. You see all the red bars? Out of all the red bars, you're going to see the bear elephant bar 70% of the time. The other 30% are the other bars, including the green ones, but especially the red ones. Out of all the red ones, that first red one right there is going to present itself 70% of the time. That's 7 times out of every 10 times. Now that's crazy high. That's a crazy high occurrence rate. So the elephant bar, the bear elephant bar, has a 70% occurrence rate over all the other bars. So you're going to see this bar and be able to identify this bar and ultimately be able to take advantage of this bar far more frequently than any other bars. And how amazing is that when you combine it with the second statistic? It has an 82% follow-through rate, traders. Guys, look, you should be circling this right now. You should be taking a picture and circling this. 82% follow-through rate, which means that after this bear elephant bar, 82% of the time, you see more red bars to come. That's what a follow-through rate is. Not just you, 82% of the time, you're going to see more red after this bar. Which means that if you bet on this bar, 82% of the time, you're going to see profits. 82% of the time after this bar, it should go lower. 82% of the time after you enter this bar, and I'm going to teach you how to do that, you should have money. That means 8.2 times out of every 10 trades, you're richer than you are. You're richer than you were before you took the trade. Think about that, traders. Think about how powerful that statistic is. 8.2 times, which means that sometimes you're going to win 9 times out of 10. Sometimes you're going to win 10 times out of 10. So 8.2 times out of every 10 times you play this bar in a bear market, you've got money. Wow. Now, it's very rare in life, traders, when you have something with this high of an accuracy rate that happens all the time. 72% occurrence rate. Usually in life, these two things don't come together like this, traders. Usually in life, if something is very high in accuracy, it's very low in frequency. Usually in life, if something's very high in frequency, it's very low in accuracy. It's very rare when you get the two together, where something is extraordinarily accurate, 82% accurate. But it also happens all the time. This is a gift, traders. Do you understand? Knowing this is a gift, it also builds a trader's confidence in playing this aggressive when it needs to be played aggressive. Knowing that 8.2 times out of every 10, every time I do 10 bear elephant bars, I've got money. Every time I do 10 elephant bars, I've got money again. The next 10 bear elephant bars, I've got money. I've got money. I've got money. It's not the money after every trade. It's the money after 10 of them. So I'm always telling my traders, rush for 10. Get 10 bear elephant bar plays under your belt. And I promise you, if you've done them right in this bear market, at the end of 10, you've got more money on the 10th trade than you had on trade number 1. This is very, very powerful, traders. And we're going to look at a lot of examples. So don't worry about that. Don't worry. All right. So 72% occurrence rate, 82% follow through rate. Now let's go to the next thing. I get so hyped. All right, look. Step 1. Remember the bear elephant bar. Let's take a look at what I mean by follow through rate. The 82% follow through rate states that after the elephant bar, the first red bar you see, there should be 82% of the time more downside, more red to come. It's not over when you identify this bar. Now, there's something I have to explain to you about what an elephant bar is. See, if I were to draw a regular bar, this would be a regular bar. You see? So you'd have a regular bar here, and then the elephant bar is next. The elephant bar is taller. It's longer. And the vast majority of the bar from high to low is the color itself. So for instance, you might have a bar that's the same length from high to low, but the body is small. And that's not an elephant bar, despite its length being equal. A true elephant bar, the vast majority of the bar from high to low is the body. That's why it's an elephant bar. And what this elephant bar is signifying, traders, is that sellers are very powerful. The bar started here and dropped all the way to here. That's very powerful selling. So if there are 2 elephants in the market, and there always are 2 elephants in the market, right? There's a green elephant. I don't know if I'll draw this correctly. There's a green elephant, right? I got a 2-headed elephant. Well, you get what I'm saying. All right, this is supposed to be a tail or whatever, but there's the green elephant, and then there's the red elephant, right? There's a red elephant there. Boom. I did a little better job with this one. Yeah. All right. A little bit anyway. All right. So there's there's a green elephant and there's the red elephant. Now, our key is to determine which elephant is making the biggest footprints. Which elephant is stomping on the ground the loudest? Which elephant has the more weight in the market? And if the majority of, if you measure green bars versus red bars, and you see that the red bars on average are longer than the green bars on average, then guess what elephant is in control? The bear elephant bar. But if green bars on average are taller than red bars on average, then the green elephant is in control of the market. So bear elephant bars in a bear market dominate and make it clear which elephant is doing the biggest activity, making the biggest noise. All right? And it's the bear elephant bar that has a 70% occurrence rate and an 82% follow through rate in bear markets. This is not the case in bull markets, but in bear markets, it is the case. So 82% of the time, you get more follow through. This is what's called more follow through. And this bar happens 70% of the time over all other bars. Okay, let's continue. That's step one. All right. Know the bar that matters. Know the singular bar that matters more than any other bar, the bear elephant bar in a bear market. What's step number 2 to making money in the bear market? Knowing how to enter that bear elephant bar. Now, there are 2 ways to enter this elephant bar. What I mean by entering is that we're going to short into this elephant bar. We're going to bet on the downside. We're going to enter this bar with an anticipation entry, or we're going to enter with a confirmation entry. Both are legitimate entries, but let me explain the difference. The anticipation entry dives into the bar before the bar finishes trading. So let's say this bar is a 2-minute bar. It takes 2 minutes to complete itself, okay? And I do predominantly recommend traders to develop their skill using 2-minute charts, 2-minute bars. So from this point on, we're going to assume that every bar is 2 minutes in duration. Okay? Now, 2-minute bar. When you are diving into this bar, you want to make sure on average you dive in at or slightly after the 1-minute 30-second mark. Write that down. Hint, hint. So this is what we mean by anticipation. We're not going to wait for the full 2 minutes to finish. We don't need any more proof. We don't need any more validation. We don't need confirmation. This is a freaking elephant bar that has an 82% follow rate. I'm getting in now. I don't need another 30 seconds. I don't need another 20 seconds. I don't need another 15 seconds. I have enough proof. Boom! Anticipation entry. 1 minute 30 seconds, 1 minute 40 seconds, around the 1:30. It can be a little bit after. I just be careful if it's too early. If it's too early, you can get tricked a lot. So if you do it after 15 seconds, there's still a minute 45 seconds left. The vast majority of the 2 minutes out of the way. And if I have a nice 70% bear elephant bar, boom, that's all I need at that 1 minute 30-second mark. I dive into the elephant bar. Now, there are times, quite honestly, that I wasn't watching carefully enough and I miss it. I miss diving into the elephant bar. So what am I going to do? I'm going to take the next best entry, which is the confirmation entry, and I am going to enter the moment it trades 1 penny under the elephant bar's low. There's the low, 1 penny. Boom! Now, in this bar, you don't have to wait any. There is no waiting. The moment, the instant, the nanosecond it trades under the low of my elephant bar, I'm in. So these are the 2 ways we enter. The anticipation is to enter the elephant bar right before it closes, 30 seconds before it closes, more or less. The confirmation is to wait for the elephant bar to finish completely, mark the low of the elephant bar off, and the moment, the instant, the millisecond, the nanosecond, it trades under that low, boom, you're inside of the play. And you're now going to wait for the 82% follow through statistic to take care of you. Now, a lot of people say, well, Oliver, a lot of people ask me this, say, Oliver, what is the better entry? Is it the confirmation where I get in early? Or is it safer and better if I just wait, make sure that elephant bar is nice and solid, and then boom, go in under that elephant bar? A lot of people assume that confirmation, waiting to be extra sure, is better, but it's not. Anticipation is better. Yes, you don't quite have the absolute certainty, but it's close enough because there's only 30 seconds left in the bar, and that's not enough time to change the bar. But here's why. On average, it doesn't work. And there are times when it doesn't work, traders. This is real life. This is the real world. It's not freaking a Disney movie. All right? We are going to lose. We can't ever get rid of losing trades. So at times, I didn't say it's 10 times out of 10. I said 8.2 times out of 10. So 1.8 times out of 10, you're going to lose. We have to deal with that. Man up, woman up. We got to deal with loss. All right? But when you lose, statistically with anticipation, you lose less. This game is really more about losing less than it is about making more. Making more happens by itself. Losing less can't happen by itself. It needs you to do that. The market can make you more, but the market can't deliver less loss for you. You deliver less loss for you. You curtail your losses. The market can't curtail your losses. You keep your losses under control. The market can't keep your losses under control. The market can give you extra gains. Shoot, you can go to the bathroom and come back in the middle of a trade and have more gains. What did you do? Wee-wee? All right? You didn't do anything but wee-wee. All right? So the market can deliver gains for you that has nothing to do with you. But what it can't do is deliver controllable small losses. You deliver controllable small losses. So in a sense, this game is more about you learning how to have controllable losses and letting the market worry about more and more profitability. But I'm here to tell you the anticipation entry is a lower risk entry, although it might seem like it's the confirmation entry is more secure or safer, but it's not. So let me go back to this. If you think about this, you're going to lose a little bit more if this doesn't work on confirmation. You're going to lose less if it's anticipation. Now, this will become a lot clearer when we go to step 3. All right. But at least I want you to understand how to enter this bar when you see it on a chart. You're going to enter it. It's going to start here. It's going to start here, right? It's going to be a little bit of red. Then it's going to drop down and be a more red, and then drop down to be more red. And as it's dropping, you're starting to saliva. Your saliva is starting to drip down the corners of your mouth because you remember that Oliver says, "Oh my God, bear elephant bars in a bear market have an 82% follow through rate, and this bar is growing in its redness. Oh my God, 1 minute 30 seconds, boom!" You're going to put your money into that bar 1 minute, 30 seconds into the 2-minute period before it finishes trading or thereabouts. If you miss it, you're going to take the next best entry and get into the next bar that breaks the low as soon as it breaks the low. Those are the 2 ways we enter our play. Now, step number 3. We have to protect ourselves. This is extraordinarily important because, as I mentioned to you, no matter how good we get, we can never eliminate loss. We will lose forever. It is not you should not try to eliminate loss. You should try to learn how to lose right, because you will lose. There are 2 ways to lose, the right way and the wrong way. You want to lose the right way. In fact, traders, I will tell you this. Everybody who comes to me and says, "Oliver, I'm a very good trader. I just don't have enough capital. Can you give me capital?" And I'm willing to do that for you, by the way. I'm willing to give you capital because I can't find every bear elephant bar in the market. I wish I could. I wish I didn't need you, but I need you because when I'm on an airplane, I want my traders finding elephant bars. When I've got a doctor's appointment, I can't be there. I want my traders with my money putting money into bear elephant bars. I can't be there if I'm in a doctor's appointment. If I'm playing the elephant bar, the bear elephant bar in Microsoft, what about the bear elephant bar in Starbucks? I want the Starbucks one. I want the Microsoft bear elephant bar. I want the Apple bear elephant. I want all of them. I'm greedy like that. Do you understand? I'm greedy like that. So I'd rather give all of you a portion of my money and send you out into the world as freaking elephant bar hunters. And we all win together. There's power in numbers. Do you understand what I'm saying? I can't be at every elephant bar at the open. I can only be at one, maybe two. But what about all the others? And I want them all. And as a team, we can grab every freaking elephant bar out there. Woo! Whoa, that's the plan. All right, okay. Listen, we have to know how to protect ourselves, right? So let's go to step number 3. We know how to enter. Now we have to know how to protect ourselves. Let's go to step number 3 here, right? Boom! We protect ourselves with a protective stop right above the bear elephant bar. It's as simple as that. How much above? 1 penny. That's it. If the top of this elephant bar that you went into the elephant bar right there, boom. If the top of this elephant bar is, I don't know, $40, it's $40. You're going to enter, you're going to stop out at 40.01, not 2, not 5, not 10, 1. It just didn't work. So basically, once you enter here, if the stock then goes like this, boom, you're out. All right, lick your wounds a little bit, walk around your office, go to the kitchen, grab a bottle of water, come back, shake it off, man up, woman up. This is going to happen 2 times out of every 10, more or less. If we round the numbers, 8.2, let's knock the 0.2 off, 8 times out of every 10, 2 times out of every 10. But this is losing correctly. You did nothing wrong. It's not your fault. It's the stock's fault. It's not your fault. It's the market's fault. You are you are not burdensome. You are burden free. You can be rest assured you did everything right if you played this the way I'm telling you to play it. You got in on anticipation or confirmation and it just didn't work. It's only one of the few out of 10 that's not going to work, and that's life. So knowing where and how to protect yourself is one of the most critical things in proper trading. You are protecting ourselves 1 penny above the elephant bar. Listen, think of it this way. If the reason that I am diving into the market, risking my money, if the reason I'm risking my money diving into the market with my family's money is this elephant bar, why do I still want the play if
in this video I'll walk you through some high-level information about what an encoder is, some use cases for using it to live stream, and some basics on how to set one up.
And the way I tell traders this, the way I teach them is I teach them like they're my babies, right? Because they are my babies, right? So I teach them like this. Let me show you. Just say, remember when we were kids, we used to draw like a little sun in the right-hand corner of a blank page, right? Remember that? We used to draw the sun. And the grass, we used to have the grass below, right? And there's the grass. I used to do this in kindergarten. Maybe I'm dating myself, but a little grass here, whatever. And then these are the people right there. There's a little person right there. There's a big person right there. And then now think about this. The biggest person now in this picture is the green. Look at the big person. You see that? The big person is the green person now. Now, look at which person gets the sun. See the sun rays? The green is blocking the sun, is blocking the red from receiving the sun, receiving the energy, receiving the gift of life. You should not be betting on red anymore because red doesn't get the love anymore. Green has wiped the red out. Green is blocking the red. Green is blocking the red from receiving the sun. You should be out of this thing. Don't guess, don't hope, don't pray, don't roll bones, don't call the psychic hotline. Get the freaking heck out of Dodge and call it a day. There's another trade right around the corner waiting for us. So you stop out right above the high of that red elephant bar. That's going to happen about 2 times out of every 10, statistically speaking. And if you keep your loss limited to this, the other 8 will make you freaking rich. Don't worry about these 2. It's the 8 that matters. All right? Now, let's move on. You got my little corny drawing, but it makes sense, right? Okay. Step number 4. Know what locations to play. Now remember, guys, let's go back here quickly, right? Step number 1, know which bar matters in a bear market. That's step number 1. The bear elephant bar matters more than every other bar. In fact, guys, ignore every other bar. Why even waste your time? I'm teaching you how to be the most efficient trader in a bear market there is. Forget everything else. Forget all the other opportunities. It's the bear market. It's the bear elephant bar opportunity. That's it. And we can limit our trading time, expand our profitability, and freaking go to the beach after 20, 30 minutes every single day. If you have a beach in your area. Now, I'm in Medellin. There's no beach, but that's okay. I'm not that far from a beach. Or go to the park, or go to the mall, or do whatever it is that you like to do. But we don't have to sit in front of a screen all freaking day long to make good money in the markets. We don't need that. So let's be efficient. Let's focus on the one thing that matters in a bear market, the bear elephant bar. Boom. That's step number 1, because it has a 70% occurrence rate and an 82% follow-through rate. Boom. Step number 2, we have to know how to bet our money in the bar. We have to know when to strike. If you can identify an elephant bar but have no clue when is it time to strike, you're still lost. Step number 2 tells you when it's time to strike. 1 minute and 30 seconds into the bar, into the 2-minute bar. If you miss that, it's 1 penny under the elephant bar. 2 ways to enter. Anticipation being better, confirmation being the second best. They're both good. All right. Now we've striked. Now we've put our family's money into this bar. We've made the bet. We're now at risk, but we have to limit that risk. And that's where step 3 comes in. We limit the risk to 1 penny above the elephant bar. We're not going to lose we're not going to lose 2 elephant bars. We're not going to lose 3 elephant bars. We're not going to lose an elephant bar and a half. We're going to lose 1 freaking elephant. I'm going to win 8 elephants, but I'll lose 2 elephants, 10 elephants. All right. So we know how to protect ourselves and keep our loss limited to 1 bar, 1 elephant. All right. Step number 4, location. Now, guys, let me explain to you. Out of all the things here, out of all the steps, this is kind of the most important one. Now, I'm telling you that step number 1, the elephant, know the bar that matters, the elephant bar. I made that step number 1 for a reason because, hey, without the elephant bar, we don't have the accuracy rate in a bear market. So that's important. But I'm telling you now that location is more important than the freaking elephant bar. This, out of all the steps I'm going to teach you today, there is nothing more important than location, 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 just like in real estate, right? So think of it like this. You can be a great house builder. You can be a great architect and build the best houses. But if you build those great houses in the stupidest, downtrodden, poorest neighborhoods location, your properties, your houses don't fetch the value they should. So it's not as great as the house can be. If the house is not in a spectacular neighborhood, it will never reach its potential value. Let's take this analogy to the market. Your elephant bar is important, the house. Your Bear Elephant Bar is your house, all right? That house is very valuable. That house is powerful. That house can make you rich. The Bear Elephant Bar is your house. We live in this house in bear markets. But if we don't ensure that our house, the houses that we go into, the Bear Elephant Bars we go into, are not in the right location, then the Bear Elephant Bar's value drops. The house's value drops if it's not in the right location. And so this actually makes the location more valuable than the house. The neighborhood is more valuable than the house. You understand? The location is more valuable than the Bear Elephant Bar. And that's why location matters. Location is the most important step of all the steps. So let's get back to it, okay? Take notes. This is going to change your life. Take notes. Okay. Know what locations to play. Now, there are 7 locations. I can't teach you all 7, guys. All right? I do this for my traders, but I can't teach you all 7. But I am going to give you the 2 best. So that's cool. Can't give you all of them, but I'm going to give you the 2 best for Bear Elephant Bars in a bear market. Location number 1. Now, before I even show you what location number 1 is, I have to talk very briefly about the things that we judge location by. We judge location by 2 moving averages, which you see depicted on this slide here. There's the 20-period simple moving average and the 200-period simple moving average. Now, remember, I am suggesting that you do this on a 2-minute chart. You can do this on any time frame. It works. But I'm suggesting that you predominantly do this on a 2-minute chart because we're talking about short-term oriented gains in terms of making a living in the markets, not the bigger your time frame, the longer your plays, and the longer they are, the less likely you're able to use them for making a living. All right, so 2-minute time frame, right? That means the 20-period moving average is averaging the closing prices, the last 20 closing prices of the last 22-minute bars. So if you look at this moving average, it's evening out the last 20 2-minute bars. This moving average is smoothing out the data of the last 200 2-minute bars. Now, when we put these 2 moving averages on our 2-minute chart, right? Sometimes they will be relatively close together like this, and sometimes they will be relatively far away from each other like that. All right? Okay? The best scenario is when they're not so far away in some cases. In the case of what we're talking about, it's best if they're not so wide apart all the time. But anyway, it doesn't really matter. We're going to take these 2 moving averages, and we're also going to take the stock itself. So let's just say the stock is doing this right now. Right? So there are 3 items. Let's look at the 3 items we're going to use to judge location. Item number 1 is the 20. Item number 2 is the 200. Item number 3 is the actual stock itself. Now, if I take all 3 items and draw a box around them, watch this. I'm going to draw a box around all 3 items. I'm going to make sure I get all of them in the box. So right there. So I got all of them in the box, right? Now, this box serves as my location item. So your stock is either above the box or below the box. I should do that different colors. So your stock can be above the box or below the box, generally speaking. All right? That's how we judge location. We grab the 20-period moving average, we grab the 200-period moving average, we grab the stock, we draw a box around those three items. Now, is my bear elephant bar above the box? Is the bear elephant bar below the box? That's all we need to know. Now, let's move forward. All right, hope you got that. Let's move forward. This is very, very powerful. Guys, you will not, listen to me. Listen to me carefully. Cheers. You will not find this in a book. You will not find this in a course, in a seminar, at an exposition, at some trading event. You will not find this in a trading magazine. You will not find this on YouTube. Guys, I have been doing this for 40 plus years if you count the idiot years. If you count the professional years, it's 36, 37. But including the idiot years, it's 40 plus years. There's very few people with that experience. So listen, what I teach you does not come from me taking a course from someone. There were no others when I started. What I teach you does not come from a book I read, does not come from a seminar I took, does not come from a magazine article, does not come from some trading show I went to. What I'm teaching you does not come from watching people's YouTube videos. What I teach you comes from my own experience trading the markets every single day of my life for the last 4 decades. Do you understand this? This is not second-hand, third-hand, regurgitated information I got from someone else and repackaged it and tied it with a little bow and presenting it to you. This is pure, direct from the heart, pure, direct from my own experience. And if you see anyone with similar things being presented to you, know that they were mine. I'm one of the first educators in this space, 1994. Go look back. Go look back. 1994, 1986 in the markets professionally. 1994 became one of Wall Street's top instructors of traders. 1994. How many people on YouTube were training traders professionally in 1994? How many people have even lived through a bear market? This is my 9th bear market in my career. 90% of the people have no experience with a bear market. This is my 9th one in my whole career. And I'm telling you, what I am teaching you today, you're going to love bear markets. You're going to pray for bear markets. When a bull markets come, you're going to be like, no, I don't want to give up this 82% follow-through rate. I don't want to give up this 70% occurrence rate. I don't want the bull. No. That's how you're going to be. I'm telling you, you'll see. I digress. Let's get back. I know I'm crazy. All right. So we know how to grab locations we know how to base our location by grabbing the 3 items and drawing a box around them, right? So let's look at the location. Location number 1 is this one. Boom! My God, it makes me salivate right now. Let me grab a nap. It makes me salivate right now. Oh my God. Guys, if you get a bear elephant bar right under both of the moving averages, I'm not talking about down here, guys. Look, it's different down here. I'm not talking about down here, you see, where there's that separation, you see. I'm talking about relatively close to the bottom of both moving. Oh my goodness. This is the juiciest. This is the best. This is your highest. This is your highest probability play. You can't beat this. You can't beat this in any other scenario. That's why it's number one. Now remember, you know how to enter this. I taught you already. You're going to know how to enter this already. Anticipation or confirmation. Boom. You see this bar. Now remember, guys, first, let me do this for you. Let me show you this. This is going to be cool. Let me do this for you. So first, right, you're not going to have all of this. It's going to start with it's going to actually start with a dash like that. You see? It's going to start with a dash. And you're going to be like, oh, whoa, it's starting in a great location. If this grows some red, oh my goodness. And then it's going to do this. You're going to see, oh my God, a little bit of red is forming. If this keeps going, I'm in. And you're going to be like this. Let me do this here. Let me do this. Gotta do it like that. So you're going to do like this. You're going to be like, okay. Then you're going to be like, you're going to be like, so, I'm telling you guys, some of you are going to start hyperventilating. It's a red bar in the best position. Let me get ready. Saliva is going to start dripping down the corners of your mouth, all on the keyboard, all on your hands. And I'm telling you, the rule I tell my traders, if you're a saliva trader, because some traders do, they start salivating when they play. Don't wipe until you get the play. You get the play and then you wipe. That should be step number 5. Step number 5, right? Don't wipe. Get in and then wipe because you might miss it. I know, I'm crazy. All right, good. So look, check this out. So we've got the red coming. You're getting ready. You're watching. Okay, it's a minute, 15 seconds, a minute, 20 seconds. And boom. You see? That minute 30-second mark, you're putting your money into this bar right there. Boom. Well, remember your protection. You're protecting yourself right there. Boom. That's your protection. Now you want the 82% follow through to take over. All right. If you miss this one, you're going to get the confirmation on the next one right under the low. Boom. All right. Good job. That's it. This is your best, guys. This is your longest green. This is where your highest consistency rate is going to come from in this bear market. This is where the biggest amount of money is going to come from in this bear market. Your consistency comes from this location. The biggest money comes from this location. That's why it's number 1. Now, location number 2 is actually above the box, above the moving averages in the stock. But it's decently above. It's not above here. See? That's different. It's close to the box, right? Remember, this is your box, right? You want it a distance from the box so that it has room to fall to the box. Take a note of that. If it's too close to the box, the odds are different. It still might work because we're in a bear market and bear elephant bars work in a bear market. But the ones that work the best are away from the box. They have room to fall to the box. All right. So position number 2, here's your box, is above the box with a decent ample space between the stock and the box and the top of the box. Now remember, you know how to enter. Once you see this, now remember this, you're going to see initially, right? Initially, you're going to see this. This hasn't happened. You're going to see this initially. You say, whoa, here's my stock. This stock just opened above the box. And you're going to say to yourself, if this starts producing red, I'm all over it. Like I'm all over this like white on rice. Do you understand? And then you'll see a little bit more. Boom, you're watching this red grow. And you're like, boom, that's all I need. 1 minute, 30 seconds, solid red. Boom, there's your entry. Anticipation, about 1 minute, 30 seconds into this bar. It hasn't finished trading. If you miss it, you're going to grab the confirmation entry, 1 penny below the low, and you're going to wait. You're going to, oh, I forget, you're going to protect yourself. Don't forget that. Protect yourself. 1 penny above the elephant bar, and you're going to wait for the 82% statistic to take care of you. That's it. Your 2 locations. Take a look. Take a look. Your 2 locations. Wow. Take a snapshot. Do it now. Take a snapshot. Share this. Share this with your family. Share this with your friends. Share this with everyone. This is the money shot right here, traders. It's the money shot. I'm telling you, it's the money shot. So now, traders, right? What we've got is, I want to see your faces here. I haven't looked at your faces here. What we've got, right, is you've got the number 1 bar that delivers the most consistently out of every single bar the market can ever throw at you. The market only has a limited number of bars to throw at you. But in a bear market, there's only one that really has the best statistics. The best statistics to follow through, the best statistics in terms of how often they occur. And this bar is the biggest money maker in the bear market. We also know how to, when and where to throw our money into that bar. You guys, we got to throw our money into that bar. We know, okay, once my money is in, I got to protect myself. I'm not giving up all my money to the market if I'm wrong. I'm only giving it up to here. All right. And then, but there are so many of these. Listen to me carefully. There are so many of these elephant bars. Oliver told me they happen 70% more of the time than all other bars. There's too many. Which ones do I play? Now you know. The ones that occur in 2 freaking locations. You forget all the other ones. Yeah, they're elephant bars, and yeah, they may go down. Yeah, they might deliver, but why not just limit ourselves to the creme de la creme? The creme de la creme. Why not? Why second best? This is what I'm telling traders all the time. Dude, why are we focusing on the third best? I want the best. This is a life philosophy for me, right? I got 2 choices. It's easy. Which one's the best? All right, give me that one. All right, Oliver, here's his 2 cars. All right. Which one? Which is the best? Okay, that one. 2 houses. All right, well, which is the best? Who's got the best neighborhood? That one. Choice is simple for me. I want the best. You know? People come to restaurants all the time. So we've got like 4 desserts for this evening, if it's one of my cheat days, right? 4 desserts. All right, which one's the best? Oh, well, they're all good. No, they all might be good. That's not what. Which dessert is the best? You tell me what's the best one. It's this one. All right, that's the one I want. All right. So instead of focusing on all the elephant bars that form all over the place, we're going to focus on the elephant bars that form in 2 locations because those are the best locations. It's simple. This is not rocket science, guys. It's not rocket science. All right. Now, do I have time for this? I'm already past my time. But should I? I want to give you something, but I may just not have time. Shoot. Let me know if I should do this. Because some of you may have to go. So I'm not going to give it to you if you have to go. Just let me know. Should I give it to you? It's one thing I want to explain to you that will add, I think, some extra value. So you let me know. Because we do have to look at, I want to show you real examples here, guys. I'm going to show you real examples. All right. You want to see it? Okay. You sure you can stay? Because what I hate is when I go overtime and half of the people leave. I hate that. All right. So if you're going to stay, I'll do it. All right. Check this out. I'll do it. I just want to quickly explain to you, traders, why position 2, right, works so well as well, right? Especially off the open. So guys, I want you to imagine that your stock was doing this. And then all of a sudden, this morning, it gaps up here. So in one fell swoop, it gaps up above your box. You understand? It gaps up way above your box. If you were a trader that owned the stock here, this is you right there. I'm going to draw you right there. And you said, I'm going to hold this stock into tomorrow. And all of a sudden, tomorrow morning, it instantly gives you an instant gain of $10,000 on the gap. You just went $10,000 gain on the gap. Instantly. The moment this starts going from 10 to 9.8 thousand, guess what this little guy is going to do? Sell to protect the gain. Guess what this guy is going to do? And this one. And this one from yesterday. And this guy. And this guy. And all of these guys. Guess what they're going to do on the gap? They're going to sell, 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 sell. They have an instantaneous gain in a bear market on the upside. Now, guess what I'm going to do and you are going to do? We are going to come in and help them. Boom. That's OV. That's me. This is you. You're going to come in and you're going to sell too. Boom. Anybody you have shared this with is going to do it the same. Boom. And so you've got 2 groups of traders pounding on this stock. The traders from yesterday, boom. The traders from today that know the odds are 82% down. And that's what creates the reliability of this dropping in a bear market. Gaps to the upside are sold into heavily by traders from yesterday. They're also sold into heavily by traders like me and my traders whom I taught this to. It's almost a self-fulfilling prophecy. All right, that's what I wanted to share with you. Now, let's keep going. All right, this is wrong. I guess I missed that. Step number 5. Step number 5, when to double down or add. Listen, let me explain something to you, traders. Let me explain this to you. I have been in the markets for 40 years plus. In all of my decades, I've run across some really amazing, powerful, big traders in my life. I am proud to say I have taught and trained and nurtured some of this market's best, most accurate, biggest traders. I've never met or never trained a trader that became big and powerful, hugely profitable. Never met one, never made one that didn't add. You must become an adder to your winning plays if you want to be a big trader. You must learn how to add, to double down when it's working. You understand? And if you don't do that, you will never be a big trader. You might be an accurate trader, but it'll be smaller change. The adders become the big ones. When you double down on the play, when you add more to the play. And I'm going to teach you today a simple approach to adding. Okay, let's go. Know when to double down and add. You're going to add on the first color change. So once you have identified the bear elephant bar in the right location, once you have thrown your money into the elephant bar, once you have placed your protection 1 penny above the elephant bar's high, you're going to wait for the first green bar to develop. That's right, you're going to wait for it. And when that first green bar finishes, you're going to mark off the low of that green bar. And the moment, the instant, the nanosecond that a red bar takes out the low, boom! That's your add point right there. Now remember, here's entry number 1, boom. Here's entry number 2 under the first green, 2, and the rest. Now you're going to double your profitability. Now, listen to me carefully. The reason why, traders, that this is the way you add is you never want the whole position on. You never want the whole position on in the first play, because what if you get stopped out? Now you're getting stopped out on the whole position. So we only want a partial position. So let's say we're going to do two lots on entry 1 and 2 lots on the add. The whole position is 4 lots. Now, yes, on some cases, if you do 4 lots here, you make more. But if you stop out, you lose more. Remember, I told you this game is more about losing less than it is about making more. Losing less is more important than making more. Remember that. Write that down. Losing less is more important than making more. Losing less is more important than making more. Losing less is more important than making more. There's a difference between, there's a difference between missed opportunity and lost money. I would rather you miss the opportunity by making money on 2 versus 4 than lose real money on 4. Lose on 2, don't lose on 4. Lose on partial, don't lose on the whole thing. All right? So please keep this in mind. This is very important. We put the rest of our position on under a green bar. Boom. We put the first position R in the elephant bar, or if you missed it, right under the elephant bar. We put the final add position under the first green bar after the elephant bar. You could have a green bar here, by the way. All right? But we're talking about the first green bar after an elephant bar, a bear elephant bar. It's the first one after the elephant that matters. Okay? First color change. We're calling this pattern a color change. We're changing from green back to red dominance. Boom! As soon as it eliminates green. All right? Now, beautiful. That's when to add to the play. When do you add to the play on location number 2? Same thing. Elephant bar way away from, or a distant amount away from the box. The 2200 stock box. All right. Boom. We enter anticipation entry. Don't forget your protection. Protection above. We're going to do 2 lots, let's say here, or half of your position. All right. And we're going to wait. After we're in, we're going to wait for the first green bar. First green bar forms. Get ready. Mark the low of that green bar. And boom. Once red takes out the green bar's low, we're back to red power dominance. You're going to put the other 2 on. Here's your total play. And that's the sound. That's that beautiful, beautiful money-making sound. You got this? You got this? Just in case you didn't get it. Just in case. Woo! All right. Yeah. Love it. Now, some of yours is like this. Oliver, I've got profit soup. No. We need to be the exclamation point on it. All right, guys. I know I'm crazy. All right. I think it's time for us to look at. All right, Oliver, enough with your drawings. Let's look at some real stuff here, man. Let's look at some real charts. All right, let's go. Let's go. Let's do it. Okay. My $5,333 trade yesterday. Now, guys, if you were to go to my Instagram, I think it's on Instagram. I posted kind of like my day or my morning yesterday, and you'll see the trade in that video. You won't see me doing the trade. You'll see the results from that one trade. I think it was like a $6,000 plus day, but the trade I'm going to focus on, there were 2 trades. The trade I'm going to focus on got me $5,333 using this strategy yesterday. All right. Now, let's take a look. It was on Square, or what used to be called Square, the company Square, Jack Dorsey's company. It's now called Block, but the symbol is still SQ. So if you want to check this yourself, the symbol is SQ. All right. Now, look, that's Block. Now, we're looking at a 2-minute chart, right? This is a 2-minute time frame. Every bar represents 2 minutes of trading. Now, the first thing I want you to do with this chart is remember, we must grab the 3 items. Here's my stock. Here's my 20-period moving average. All right. Now, remember, this is the 24th. This is yesterday. So we need the last part of yesterday, the 23rd. This is the 23rd. So the last part from yesterday is that the stock was doing this. The 20-period moving average is here, and the 200 is here. So I've got my 3 items, right? Now, let me draw a box around the 3 items. There's my box. Now, remember, the 2 best locations are right under the box or right freaking well above the box. So block opened above the box. Now, check this out, guys. This is really nice. This is really nice. Here's my box, right? We open up here. Boom. Now, I see this. I see this open. I know this is opening here. It's open right there. This hasn't happened yet. So remember, this is not there. None of that's there. Well, let me just do this again. This is there. Yeah. So what happens is I see this start to produce red, right? And I'm like, uh-oh. Boom! Stop. Now, right? Now, check this out. I'm in for 2. All right? 2 lots. Now, my lots are bigger than yours might be, so 2 lots for me is pretty sizable. Now I got my protection here, right? This is my protection. I'm going to wait for the first green. I told you that, right? Here is the first green right there. Now, as soon as the red wipes out the low of the green, now you see the green has this tail, right? No, it's the body that matters. Forget the tail. It's the color that matters. I come from way over here. You see this? See this torpedo? I'm going to draw a torpedo here, right? This is my torpedo. I'm going to put my initial on it, OV. Oh, it looks like a whale. Anyway, okay. That's cool too. Boom! I add nicely there. Got in here. Add nicely there. And the rest is freaking history. It's not rocket science. Listen, guys, if this happened, listen to this, Craig. This is how amazing this is, right? I've only had you for 2 hours. And in 2 hours, if this happened to you on this morning, after this 2 hours, you would have known specifically what to do. You would have specifically said square, SQ. That's a bet to the downside. I'm going to wait for the first 1 minute, 30 seconds to go by. Boom, I'm going to enter into that first red bar. I'm going to protect myself above the high. I'm going to wait for the first green bar. And then when red takes out the low of the green bar, I'm going to add all of the rest and wait for my 82% to take care of me. Repeat, 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 repeat forever, forever. This is something that will reward you forever. Do you understand what I'm saying? Forever. Forever, ever, ever. Forever, ever, ever. Forever. All right. It's crazy. Powerful, though. Powerful. Okay. Forever, ever, ever. All right. Boom. Anticipation entry. Do it one more time. Stop. 2 lots. Boom. First color change into color change, CC, and that was 5.3K in profits. Done. Now think of this, guys. That's 2 minutes. 2, 4, 6, 8, 10, 12, 14, 16, 18. 20-minute trading day. Now go to the beach. La playa. I love it. I love this game. All right, let's take a look at something else. Now, remember what I told you. Guys, I'm grabbing everything from Friday because you know what? Let me just tell you this. You know what? I've heard this silly thing. Oh, Oliver cherry picks from the past. He cherry picks from the past. He goes back and picks the perfect. All right. Now I only show you what happened the day before. I never go back past the day before. This happened yesterday. If this event was the day before yesterday, you would be richer today. So I don't cherry pick. I'm going strict to, I'm not going a month back, years back, decades back. I'm going to yesterday. All right. This is yesterday, the 24th. There it is. You can check it yourself. We're looking at Cisco, 2-minute chart right there. 2-minute chart. There's the 24th right there. Today's the 25th. Here, grab your box. Here's the stock from the 23rd. Here's the 200 from the 23rd. Here's the 20-period moving average up here from the 23rd. Now draw a box. You can extend that box into the future if you like. Here's your box. Now, boom! The first bar of the morning, it forms so perfectly. It starts out here, guys. Wow. It starts out here as a little red. And then you're watching this red grow, 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 grow. Boom! You put your first position on. And what do? You wait for the very first time a red bar wipes out a green bar, the first color change. Now, look at here. This is very important right here, what I'm about to show you. This green bar happens. And so you say, okay, my second entry goes in under this green bar. But you get another one and another one. So it's not this one anymore. It's the first time it happens. The first time a red bar wipes out a green bar is your entry. Boom! And the rest is history. You can stay in this as long as it stays below that 20-period moving average. That's a different part of the training, and you can add every single time that you get near the 20 and a color change. Boom! Near the 20 and a color change. Boom! Near the 20 and a color change. Boom! 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 I know. You know what I know? Let me tell you what I know. There's a number of you here. You will join my family. And out of that number who joins my family, a percentage of that number will go on to be superstars as traders in the market. They will change your life forever. They will know how to make a living from the markets from anywhere on planet Earth, 20 minutes, 30 minutes a day. Every single time I have an event, that's what I'm looking for. A percentage of you will join the family. A percentage of that group will become superstars. Repeat, repeat. That's how I recruit traders, through events like this. And I'm hoping you're going to be one of them. Now, I can't guarantee that everyone's going to get this. If everyone would get this, it would stop being special, wouldn't it? You want everyone not to get this. You want it not to be that easy. You want it to be kind of difficult, because that's why it's special. If everybody could do this, there would be no money in it. It's money in it because most people can't. Most people don't get taught properly. That's number one. Most people don't get the proper training. Second thing, most people don't have the right amount of money. You understand? And so I do that for you. I give you the training every single day of your life, and I give you the money so that you never have to tell your wife or your husband, I lost our money. No, lose mine. All right. I'm not going to be happy with you, but that's the risk I'm willing to take. I believe so explicitly on what I teach you that I'm willing to risk my money on you, and you never have to pay me back if you lose it. That's the confidence I have in what I teach you. I put my money on the line. I'm not just one of these teachers that I teach you and pat yourself on the back and give you a Hail Mary. If I teach you, I want you trading. I want us to be a partner. I want us to be in the business together. All right. When I first started training traders, I trained professional traders on Wall Street, and I would see that they would start making millions of dollars. And I'm like, damn, I wish I helped create that trader. And the firm is getting the majority of the benefit. That's when I changed my model after years of doing that. I'm like, why am I giving away the talented traders that I help nurture? What if we can be in partnership together? What if I can give them more money than they have so that they can make more with more money? That's the model I have today because I don't want to lose you. I want us to be family forever. All right. Anyway, that's the whole reason for this, guys. I can't be everywhere at once, but I can have an army of traders that grab every elephant bar in the right location. And you think about that. If I assigned you a 5 stocks and another trader another 5 stocks and another trader another 5 stocks, then gave all of you $50,000, $100,000 to trade with, and say, now don't miss a single bear elephant bar in these 2 locations. You only got 5 to focus on. And you're not risking your money. And if you make money, we split the gains. 0 risk to you. Way more money than you have. Boom, it's a perfect combination. Wow. All right, guys, let's get back. I do want to finish this for you. So Cisco, very, very powerful yesterday. Powerful play. I didn't play it, but many of my traders did. That's the whole point. So guys, while I was playing block, other traders were playing Cisco. That's the whole point. I can't be at every elephant bar. People say, Oliver, why do you teach if you're so... That's the silliest question ever. Why do you teach if you're so good as a trader? Because I want it all. I want Cisco and block. I want Cisco, block. I want McDonald's too. Look at that beautiful thing right there. McDonald's yesterday, 20-period moving average, stock 200, draw the box. You can extend the box into the future if you like. Wins the first bar is not it, but the second bar, boom! 1 minute, 30 seconds or so into that bar. Remember, your protection goes here. Once you're in, your protection goes here. And the rest is freaking history. Wow. Now, remember I told you, you can add, here are the steps. Know when to enter. You're going to enter here. Boom. Know where to place your protection, right there. Wait for the first green. There it is. Mark the low. And boom. Come from way out. There's your full position. Now, that's one play. Now, if it gets close to the 20-period moving average, you can play the next color change. Boom. Beautiful. Beautiful. All right. This is all from yesterday. Starbucks. Everybody knows Starbucks. All right, let's grab our box. Let's grab our box, guys. Let's grab our box. All right. Where is the stock? Boom. Where is the 200? Boom. Where is the 20? Boom. Draw my box. I can extend it into the future if I like. There's my box. All right. Now it's better here, but it's still okay. It's so perfect that boom, I got to give it a try. 1 minute, 30 seconds into that bar. Stop above the high. First color bar in the opposite color, first green bar, mark the low and boom, hit it up for the second. And guys, it's freaking as simple as that. People always say, Oliver, it can't be that simple. Yes, it's that simple. You're making it difficult. I'm showing you that it's freaking that simple. I show you every day. My program, I trade live every day. My traders trade live in your faces every single day. Repeat the same thing every day. Show you live. You follow us live every day until it gets so deeply ingrained in you, it's automatic. You know? It is. I'm not saying it's easy, but simple. Simple and easy is different. Simple is basketball, or soccer. Get the ball in the net. That's it? Yeah. But it's not that easy when you have another team trying to stop you from getting the ball in the net, right? So the game is simple. It's not always easy. That I will never tell you that it's easy. It's not easy. You're going to have to work at it, but it's simple. And that's what makes this so special. It's not complex. It's not 150 moving parts. And think about it, guys. It's red bars and green bars, boys and girls. Red bars and green bars. 2 moving averages, boys and girls. Two bars. Red bars,